I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views, which you can find on cyclesman.com. Welcome back to the show, Tim.
Jim, thanks again for having me.
People are asking me about both the Toronto Stock Exchange and New York Stock Exchange posting record numbers lately, although today a bit of a downturn. Is this the real thing, or is it just more of the same?
Well, it's the real thing, all right, in one perspective, but it's awfully abnormal. I want to talk about, I was thinking about what to talk about today, and I guess I have to go back to Greenspan's words, and that's irrational exuberance. And, I realize that we've seen new highs. I realize that this thing is stretched and stretched and stretched beyond, anything that I or most technicians that I know have expected. Does that change the fact that it's stretched or that we're at new highs? Well, no. But it has created an environment in which people are thinking that there's some kind of a new norm or something. And it's not. It is a bubble. And I want to try to show that today. I was thinking, how can I possibly try to show that today? And again, I'm not dismissing where the market is or what has happened, or that even from one perspective, people can say, well, anybody's been trying to say that this is a bubble or we're moving into some sort of a major top or whatever have been wrong. I'm not trying to dismiss any of that at all. But at the same time, you can't dismiss that this is a bubble. And I want to show that and illustrate that today. Number one, since 1896, and I should have sent you a chart. Maybe I can do that for next time. Help me remember, or maybe I can post it somewhere on my website. But since 1896, there is a clear ebb and flow of a cycle, and if you put them all in a bucket and divide by the number of cycles, it's averaged 48 months and some change. I think it's 48.11 months. It goes up, it comes down, low to low has averaged 48 months. Okay? The last normal cycle we had was from 98 to 2002. It went up out of the 98 low, declined, or, peaked in 2000 and then declined into the 2002 low. That was a normal 4-year cycle. Since then, we have seen the irrational exuberance, and to show that, let's just look at all you have to do is look at the numbers. I mean, up to that point, like I said, we've had an average duration from low to low 48 months. Well, then all the monkey business started with trying to reinflate and keep this thing going. And from the 02 low, we saw that 4-year cycle extend to what was then a record 60 months up. 60 months to the top. And, I said throughout that extension, it's not going to end well, and we should expect a decline below the previous 4-year cycle low based on the statistics, and that it is an extended cycle, and so on and so forth. And the statistics, they did finally snap back, and we got the decline into the 09 low. Coming out of the 09 low, and I've made this comment before, but they do more of the same that created the worst financial crisis since the Great Depression. And this time, coming out of the 09 low, we saw that cycle that normally averages for 48 months from low to low. We saw it extend, and I did this roughly on the fly just before you called. But if I counted it right, it's 74 months from the '09 low up into the 2015 high. And you say, well, how do you know there wasn't a 4-year cycle low somewhere in between? That goes back to our markers, DNA markers, and all the statistics. There was not one. Okay, make a long story short, there was not one. The 4-year cycle top did extend just like the one coming out of the 02 low into 07, and this time it was even longer. And then it rolled over into the August, according to the industrials, it rolled over into the low in August of 15. The S&P and most other indexes made the low in either January or February of 16, but on the industrials, the low point for that decline was in August of 2015. Look at this statistic. Oh, by the way, let me back up. It has since proven that low was a 4-year cycle low. The August/January 16 low was a 4-year cycle low. Looking at some statistics, the average decline of the average 4-year cycle is 34.43% since 1896. The decline into the August low was 16.24%. It was half of a normal decline into a normal 4-year cycle low. If you, within the 4-year cycle, there's a little annual cycle that ebbs and flows, and there's been some 120 plus of those cycles. And since 1896, the average decline into that cycle has been 18.58%. We didn't even see an average decline for that little annual cycle into the 4-year cycle low in 2015. Coming out of the 09 low, the only other significant lows we had was the low in 10. It was a 14% decline into that annual cycle low. And then we did see a normal annual cycle low in 11. That was a 19.2% decline. And since then, the market, or from that low, the market just went, virtually straight up into the 15 high. And so what I'm saying here, the point is that these numbers illustrate how unusual, how stretched, how extended this advance is. And the problem with that is that it is convincing. I mean, of course. I mean, you keep saying something is abnormal, and it's kind of like Hitler saying, you tell a lie often enough and make it big enough, and sooner or later people begin to believe it. It's kind of the same thing with the market. I mean, is it real? Well, heck yeah, it's real. But does it make sense? Is it irrational? Is it abnormal? Absolutely. And another chart, I sent you an update that I did. Someone sent me a chart from John Hussman, and he was showing the bubble. I mean, he's another one that is saying this. And he had something that he came out with. I think it was a median price divided by the revenue ratio in the S&P. And he shows in 2000, it topped with that ratio at about, I'm just eyeballing his chart, at about 1.65 probably. And then the extended top into 2007, it topped with that ratio at about 1.8, which was even more extreme than the 2000 top. The 2000 top was the most extreme top that he shows at that time. And then we get into the 2007 top. It was more extreme than the other one at like I said, about 1.8. And then the current chart he shows with this top, we're at like like 2.4. I mean, it's off the chart. And so from other people's measure, I don't use other people's work often, but he's showing the same thing. It's a bubble. So is it real? Of course it's real. Is there a new norm? No. It's abnormal as abnormal can be, and I maintain, like I said, that it's a bubble. Another abnormality that we saw with this, in 2015, we talked about the DNA markers as we moved into that extended 4-year cycle top. we finally saw the things, everything fell in place, and among them was, a Dow theory non-confirmation and a Dow theory primary bearish trend change. And that primary bearish trend change remained in place until November of 16. It was confirmed, in fact, or reconfirmed, in fact, with the January, February low in 2016. And then from that point, the averages never could get in gear together to take it out in accordance with Dow theory. That was abnormal, to see something that extended and distorted. And I can't point to another time in history like that. So I say all that, it's not to make excuses, by no means. I mean, it is what it is, but I say that to try to draw some sort of a picture in people's mind, or present evidence how extreme the advance really is. And I think that, at this point, who knows how much tighter the bubble's going to stretch? I don't know. We did have a 4-year cycle low forced, back in, like I said, August of 15 or January of 16, depending on the index you're looking at. And the bottom line is, until we get those markers back in place again, and a Dow theory primary bearish trend change, and the other DNA markers fall in place, it can stretch further and further and further. Does that change the fact that it's a bubble? Hell no. But in the meantime, it is what it is.
We'll have more with Tim Cyclesman Wood right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, since the last big dip in the market about a year ago, the Toronto Stock Exchange has gone up 30%. Were people smart then to keep their money in it, or was this a really risky time to be in?
I think it was a risky time to be in it, but the ones that were in it, I think the best way to describe it is that they were lucky, because and it's true with even the U.S. market or any other market. When you see something so extreme, common sense tells you that, it may be safe to take precautionary measures, be out of the market, and that sort of thing, and then it keeps going. And so that's the dilemma with this thing. It's so abnormal that it makes it hard to gauge how far the thing is going to stretch. So yeah, the people who blindly stayed in the market, of course, they look like geniuses. The ones that took heed to the warning, so to speak, they look like fools, and that they were left on the side. And again, that's part of the psychology that makes this so dangerous. What's going to ultimately, I know how the story ultimately ends. We're going to get the setup. We will see, odds are we will see, let me say this another way. I was going to say we will see most, if not all, of the DNA markers set up. That's a historical fact. And we will see. It is an inevitable fact as sure as the sun rises and sets that we will see a Dow theory primary bearish trend change. It has to happen before the bubble can burst. But what's going to happen is no one's going to believe that. Oh, yawn, we've seen this before. And when the setup does come, the turn, nobody's going to believe it because everybody's cried wolf too many times before. And then I think the bubble, eventually it does deflate just like it did in 08 and 09. And I stand by my statements that this is probably going to be even worse. I mean, we've never seen such an extension. You look at any parabolic advance in history, and they've all ended the same. I have no reason to think that this one is going to end any differently. It's just in the interim, it continues to stretch and stretch and stretch and stretch. And of course, the people that have remained in the market, it's been a high-risk environment, but they've made out well.
Where should people be looking to go right now then if you think this is kind of nearing the peak?
Well, to be perfectly honest, if I was in the market, and what I'm telling people now is that, back in 2015, it's a long answer, but let me answer it. Back in 2015, once the DNA markers fell in place and the Dow 3 primary bearish trend change occurred, I would want no part of that. I mean, because that it has occurred at every 4-year cycle top since 1896, and it occurred at the top of the most extended 4-year cycle in history. So anybody with 2 brain cells would take heed to that. And then we got the decline, like I said, the weak decline into what ended up being the 4-year cycle low in August of 15. And then all throughout 16, it took until November to prove structurally that the 15 low was the 4-year cycle low. Well, then the problem becomes, now we're in the midst of this move. Okay? I mean, it's underway because we had an intermediate degree low in November, and then following that intermediate degree low, all this stuff blew out. Well, it's kind of hard to jump on the train once it's left the station is the point. And so this move has occurred, and now we roll over. We have there are some cyclical lows coming up. There's a clustering of cycle lows coming up in the next few months on the horizon, and we should be at those tops now with a rollover into those lows. And for anyone who feels like they want to participate in this environment, then provided, for my subscribers, what I'm telling them is provided we don't see, something structurally happen to tell us that the market has peaked as we roll over into those lows, then once those cycle lows have occurred, then that's the point. Hey, get on, the train is stopped, jump on board. And, hey, maybe it is Dow 36,000. Maybe it's not. I don't know. And so the thing is, at that point, it would be a lower risk entry point, if you would, to jump on the train and ride it until we did start to see more signs of trouble. I mean, that's the only thing I think people, I mean, if you want to participate, that's the spot to do it. Not when we're sitting right here at a tippy top with overbought indicators, cycle lows coming to you, that sort of thing. No. Need a pullback, and then the opportunity will be there for anyone with the stomach to do it.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for Tim or anybody else on our shows can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.